slowed down in the last 6 to 7 months. The management of Berger Paint tells CNBC TV18 that the impact of competition will continue to reduce and that rival Opus will not be able to cut prices further if they want to be EBITDA positive.
You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormuz Fatakia, and with me is Vinny Motiwala, who has had a very, very busy day of her own. It's a forgettable day for the bulls today, and yet another day where the recovery on the indices could not sustain. And we mentioned to you earlier in the morning that the 17th of October low of 25,508 is going to be pivotal for the Nifty. It has closed exactly at that level. We did break below the 25,500 mark temporarily, but somehow managed to close above that. But yet another day when the index ends at the lowest point of the day, and it is only courtesy of Reliance Industries that was the outperformer today, is that the Nifty's losses have been trimmed, Vinny.
Absolutely, that's the saving grace, right? We could say, at least for today as of now. But yes, apart from that, Hormuz, when you look at the Nifty, IT, auto, these are some of these sectors which actually managed to hold on to some bit of a green in today's trading session. So that is what was at least on the positive side. Though media, metals, those continue to be under pressure. Banks also down almost 0.5% in today's trading session. But yes, that's how the market setup looked like. A lot of individual movers were mainly on the back of earnings and news flow related. Most of them were earnings related. But we have a very exciting lineup for you all on the show where what we'll start with is going to be the top movers and shakers of the day with Sudarshan, and then we'll move on and put the spotlight on Paytm and Hindalco. After reporting their Q2 numbers, we saw a bit of a move coming in for both these stocks. PB Fintech also slipped after sources say that health and general insurers are likely to trim health insurance commissions.
Over FY25 to 28, there is hardly any chance for AB Fashion to turn profitable, and it will continue to report losses, and that's the reason you have seen a big downtick, fallen more than 7%. Blue Star, earnings were not that bad, but in the con call, company has revised the guidance not only for revenue, but also for margin, and that has weighed on the stock, and at the end, the stock closed with a cut of almost 7%. Chola Investment, top line was almost in line, but asset quality has deteriorated, and that has played on the stock. At the end, it was down almost 4%. Ola Electric, earnings were not only muted, but even company has gone ahead and cut the guidance on 3 fronts: revenue, volume, and the auto business margin. And that's the reason you are seeing a big downtick, closed at the lower circuit, fallen almost 5%. Now come to the stocks which have moved higher in the trade. First on the list is Astral. Earnings were almost in line. Despite a fall in PVC prices, company has seen a big increase in the volume growth. In Q2, volumes were up almost 20%. That's the reason we have seen stock gaining as much as 7%. Paytm, there were 2 reasons. First, operationally, it was a strong set of funding. Second, stock is being added to the MSCI index. That's the reason, again, it has been gaining continuously over the last few weeks. And today also, it was up almost 4%. Indigo, it was an operationally strong set of earnings for Q2. Despite a sharp increase in the Forex loss, Indigo, at the end, it was up almost 1%. Redington and Nuvama. Redington, both on a sequential basis as well as YY, earnings were very strong. That's the reason up almost 16%. Nuvama Wealth has increased net flows guidance for FY26. That's the reason stock, despite market being under pressure, stock was up more than 2%. Lastly, some of the stocks have reacted to the news. First one was Hindalco, because Novelis has increased the capex, and that's the reason it has played on Hindalco. Stock is down almost 5%, top Nifty loser. Grasim, its paint business, that is Birla Opus CEO, has resigned after 18 months of the paint business. That's the reason stock was down more than 6%, but it has turned out to be positive for competitors like Asian Paints and Berger Paints. Asian Paints was amongst top Nifty gainers. It was up 5%. PV Fintech, we have reported that as per the sources, general and health insurance companies are looking to cut the commissions by as much as 18%, and PV Fintech, being one of the biggest had gained from the commissions, and that's the reason today, because of that news, stock was under pressure, has fallen 4%.
Okay, so Darshan, thank you so much for that. Really, a whole host of these companies moving on the back of their earnings. But let's take this discussion forward with Mayuresh Joshi of William O'Neill as well as Richard Jain of Motilal Oswal Financial Services. Thank you, gentlemen, for joining us on the show as always. Richard, before we dive into individual stocks, today the market also has not done anything exciting. Or even this week, it has not been anything that great, right? 25,500, we're just managing to hold on to that today. What are we keeping an eye out on in terms of levels now?
Yeah, hi. Very good afternoon, Vinny. Very good afternoon to everyone. Well, it seems a corrective phase within an uptrend itself, although the mid to long-term charts are not negative, but on the short-term charts, we are witnessing a pullback move in the index, which could get extended towards that 25,350 to 300 zone, where the 50-day exponential moving average for Nifty is placed. And especially the negative thing was the market breadth. If you look at the market breadth, the overall was very negative. And the mid caps and the small cap names have started witnessing a decent price-wise correction. In fact, the Nifty Midcap 100 index for third time in the recent past had resisted around that 60,000 mark. If you look at the recent past, then in the month of June as well as July, the index resisted around that 60,000 mark. So this clearly indicates in the short-term markets are going through a corrective phase where price-wise corrections could continue in certain mid-cap and the small-cap segment. But on the index front, it seems...
We take you through revenue. When we look at revenue, that increased almost by 7.5% on a quarter-on-quarter basis. And across the segment, we saw this growth. Now, there was some fall in marketing services, but this was because they sold its ticketing business just in second quarter of FY25. And that is the reason why we saw a fall in the revenues. When we look at operationally, the contribution margin, that remained fairly stable at around 59% versus what it was at 60%. And at the same time, when we look at EBITDA margin, there we saw a jump of around 300 basis points. It increased from 4% to 7% on a quarter-on-quarter basis. And apart from that, when we look at profit, if we exclude the one-offs, the profit increased almost by 72% on a sequential basis. But there was a one-off of around 190 crores because they took full impairment of one of the businesses, First Game Technology. And that is the reason why when we look at profit, that declined almost to around 21 crores. But all in all, when we look at operational performance, first is that they are actually focusing more on reducing their expenses. And that is the reason why we saw EBITDA margins increasing. Second is that they are also focusing on AI. In fact, they are also coming up with the first ever AI soundbox. And at the same time, they are also optimistic that AI can be a revenue driver. And at the same time, they can also decrease the cost because of AI. So that is something which management also gave a confidence around. And that is the reason why when we look at stock performance, they have taken it in very much in the stock performance. It is up more than 4% in a trade today.
Okay, yes, absolutely, Gaurav. Surely keeping an eye out on Paytm. But Mayuresh, what's your view for Paytm as well? From here on, do you see more upside? Are you finding it comfortable in terms of valuation as well?
Afternoon, Vinny. I think two things. As Gaurav mentioned, I think the numbers were supplementary in terms of the price action that Paytm probably witnessed. But a couple of factors that will come into play as we head into the second half. I think a worst in terms of all regulatory and other non-regulatory actions which had probably dampened the stock a year back. I think the worst probably seems to be behind. The second, I think the kind of additions that they're probably making, including the soundbox addition, I think that can be a huge value add if it kicks off quite significantly and starts contributing to the revenues as well. And let's not forget, I think if numbers keep on accelerating as the management probably feels over the next few months and the next few quarters, I think the momentum upside that the stock is probably witnessing might very well continue. Obviously, I think from a valuation perspective, I think it is penciling in the best that has come so far. But I think if they continue to outperform themselves in terms of numbers, I think the outperformance might very well continue. So from a rating rankings perspective, I think the stock looks very, very strongly placed as we look at it in markets within.
Indeed, up almost over 4x now from the record lows that it had made at February of 24. But yes, 1300 now on Paytm. Novelis was the other one, and Novelis' results had an impact on Hindalco's stock price performance today. And it was an increase in capex, an increase in costs, and rise in debt. All of it weighed on the performance of Hindalco today. Nigel tells us more on this. Nigel.
Well, that's right. Hindalco got knocked back in today's trading session as its arm Novelis posted a mixed quarterly set of numbers. The volumes were almost flattish on a year-on-year basis, but the EBITDA showed some sequential improvement even after taking a net tariff hit of close to around $54 million. The management, though, they say that the tariff mitigation efforts, they're underway, and that could start showing up in the results from the second half of the year itself. But the real concern is the fire at Novelis's Oswego plant. The company expects the impact to show up in the second half of the year, which means that the second half will be a washout. The cash flow hit could be close to around $550 million, and the EBITDA loss could be around $100 to around $150 million. Though they expect 70 to 80% recovery through the insurance, but that in all probability will only come in FY27. So near-term pressure on the balance sheet and the cash flows, well, that's something that the street will have to bear. Additionally, the net debt as well came at its highest levels we have seen in the last 21 quarters or thereabouts. That's what's prompted parent Hindalco to step up with around a $750 million equity infusion into Novelis. The biggest negative, though, is the Bay Minette expansion project. The cost has doubled from the original estimate, and the management says that inflation as well as execution challenges, that's what's led to this capex moving up. At the new capex, well, returns will be muted at just around 6% pre-tax ROCE. Even if Novelis hits, that's the $1,000 per ton EBITDA guidance that they have been talking about. So the return ratios get diluted massively. And that's reflected in the street's reaction, right? You have Investec, you have Axis Capital, Nuvama, Equirus, all of them have downgraded the stock. They're citing rising cost, rising debt, the cost overruns, as well as the near-term earnings risk. Explains why stock is smacked today.
Absolutely, Nigel, thank you so much for that. But Richard, on the charts now, what's the indication as well? Do we see this continue now, given that, fundamentally it's not looking that great?
I think the only problem was that the stock had already seen a good run-up over last 6-7 months. So if you look at the April lows, the stock made a low of around 550. From there, it rallied towards 850, 870, which is an up move of about 50-55% in 6 to 7 months time frame. And for a large cap stock like Hindalco, after such an up move, this news I think led to a good profit booking. So while the mid to longer term trend remains positive, in short term, because of this recent run up, the momentum readings were overbought, and this could lead to some further corrections towards 750, 740 zone. But yes, those who are looking for long term investment, dip towards 740, 750 could be a good opportunity to accumulate.
Okay. Surely keeping an eye out on those levels over there. But let's move on and talk about Ola Electric, because that also slipped in trade after they reported their Q2 numbers. Weak set of numbers coming in here. But what more were the details in terms of the margins, EBITDA performance, revenue? We have Sudarshan here to give us those details. Back to you, Sudarshan.
It's not been a great year for Ola Electric. Stock is down almost 50% in 2025, and today also the stock has fallen almost 5%, hit the lower circuit. And now the reason is that company has reported Q2 earnings, and the earnings were weak. And beyond that, it has cut the guidance for FY26 for revenue, volume, as well as the auto business EBITDA margin. But first, talking about the headline numbers, net loss was rupees 418 crore versus rupees 495 crore. Revenue has seen a big fall of 43% as company has seen volumes decline both on a sequential basis as well as year on year. Even EBITDA loss has come at rupees 203 crore versus loss of almost rupees 400 crore in the same quarter last year. Now, talking about the FY26 guidance, as per the earlier guidance, company was expecting revenue in the range of 4,200 to 4,700 crore, but now it is lowered and it's expecting in the range of 3,000 to 3,200 crore. As far as the auto business EBITDA margin is concerned, earliest guidance was more than 5%. Now it's been cut to around 5%. And lastly, on the volume picture, earlier guidance was in the range of 3.25 to 3.75 lakh units. Now company is just expecting 2 lakh units. So weak earnings, muted guidance lead to a big downtick in the stock.
Indeed, Sudarshan, thank you for that. Mayuresh, Ola is at a point now where you may be forced to think what more worse can happen now for the company, right? Below IPO price, 70% below the post-listing high. Would you be a braveheart and take a bet on Ola after the kind of commentary that the management has given?
No, at least we at Markets for India don't have the heart of us to probably get in. So again, I think the logic and the rationale here is that we obviously at Markets with follow companies which are growing their earnings consistently. not so over the preceding 2 or 3 quarters, but consistently on an annualized basis over the last 2 to 3 years. So I think if you find companies and pockets which are consistently doing that, the confidence and the conviction probably increases in both the managements as well as the companies to probably deliver results that will ensure steady earnings going forward. Ola has all the missing ingredients in terms of steady state earnings, where earnings remain extremely volatile. The commentary has been extremely soft. And therefore, the future outlook, even if one assumes some element of hope, if you head into FY27, FY28, it's long drawn out and full of uncertainty. So I think we don't want to bet on stocks or sectors where uncertainties probably play a major part, which might affect the risk reward ratios. So better stocks within the same sector to probably look at.
Okay, absolutely. Can look at other stocks as well in this sector. But let's move on and talk about PB Fintech, because sources tell CNBC TV18 that health and general insurers are set to cut health insurance commissions paid to Policy Bazaar. The move is aimed at supporting health loss ratio following the recent GST cuts. Yash is joining us to give us details on this one.
So after a couple of weeks of discussions within the general and the health insurance industry, all general and health insurance companies have unanimously decided that they will reduce commissions or cut commissions which they pay to Policy Bazaar on sale of health insurance policies by an entire 18%. What we've been given to understand is that, health as well as general insurance companies have taken this decision, to support the deteriorating loss ratios. They don't want the loss ratios in the health segment to increase, for which it became very important for all the companies to pass on the entire 18% cut in commission to Policy Bazaar. This cut of 18% in commission was already done to other distributors like banks and agents, and now it has been decided that the same cut of 18% will be done to Policy Bazaar as well for the sale of health insurance policies. As far as this cut of 18% on health insurance commissions is concerned, it is expected to become effective starting December 1. It is important because health as a segment is a large segment and a profitable segment for Policy Bazaar. It contributes 20% to the revenue as well as 60% to the value as far as Policy Bazaar itself is concerned. And that's not it. What also we've been given to understand is that life insurance companies are also discussing, the discussions are still underway in terms of how much cut do they want to pass on as far as sale of life insurance policies is concerned. So that decision from all the life insurance companies in terms of commission cuts coming from there also still remains to be an overhang as far as life insurance business of Policy Bazaar is concerned.
PB Fintech ending 3.5% lower as well. We're running short on time. So Mayuresh, Ruchit, thank you for sparing time and joining us today with your views on the index and on stocks as well. Take a short break, get you all the top corporate voices along with some key market events to watch on the other side of this break.
Welcome back to Markets Forward on CNBC TV 18. Now let's take a look at the key corporate voices that we had during the day today. First up, we spoke to Berger Paints. The company says that the competitive pressures will continue to ease going forward and adds that Birla Opus has now stabilized at around a 900 to 1,050 crore rupees quarterly run rate. Berger Paint expects a near double-digit value growth in Q4, while Q3 is likely to see double-digit volume growth and mid-single-digit value growth. The company also expects margins to improve in the second half of the year. On peers, Berger notes that Birla Opus can't afford to discount further if it aims to stay EBITDA positive.
Indian Metals and Ferroalloys is up next. The company is set to acquire Tata Steel's ferroalloys plant for 610 crore rupees. The management says that the base consideration plus GST is included in this. The company is anticipating input tax credit. The management also said that it will need to make an additional outlay of 50 crore rupees. It anticipates production to reach a steady state at around 2.6 lakh tons with EBITDA at around 20,000 crore rupees.
And we also spoke to Redington. The company expects double-digit growth in its PC business in the second quarter of FY26 is what they saw. Further, it expects momentum to continue. The outlook for Redington is positive as it sees strong growth in the tech segment across all geographies. It also maintains, margin guidance at around 2.5%, this including Turkish subsidiary. Additionally, the company has exited from Vodafone business in Turkey, although the full exit will take place in the next 3 to 4 months. It's anticipating its software and tech solution business to increase in the second half of FY26. The stock was perked up in trade after this.
And we bring you some key events to watch out for, joined by who else but Sudarshan, whose links are an event in itself. Sudarshan, over to you.
So I'll start with the Nifty companies, which will be reporting earnings tomorrow. We have 3 companies. First on the list is two-wheeler maker Bajaj Auto will be reporting Q2 earnings, followed by Hindalco, which was top Nifty loser today after Novelis has increased the capex. Tomorrow, the company releases Q2 FY26 earnings, and the last on that list is Trent, that also comes out with earnings. Some of the F&O companies will be releasing earnings: Divi's, Kalyan Jewellers, Nalco, Petronet, PFC, and Torrent Pharma. In economic data, we'll have forex reserves. You would have seen that over this week, RBI has been interfering in the currency market. Last week, we had seen an increase in the forex reserves by almost $5.5 billion. We'll have to see exactly what's the current forex reserves. Last one, IPO rush continues. Pine Labs will be launching IPO, and through fresh issue, companies looking to raise as much as rupees 2,100 crore. And lastly, how can we forget, we have the big leadership event that is CNBC TV 18 Global Leadership Summit. And we have lined up for you from who's and who of the corporate world, government, to the biggest thought leaders of the world. And that event starts 9:30 a.m. tomorrow. Make sure you don't miss out on anything.
We do have our appointments booked for the GLS for sure. Winnie is all geared up and ready for the event tomorrow. We take a leave.
I'm pumped up for it.
More so because tomorrow is a Friday as well. So you need to keep that in mind. We take a leave on this edition of Markets Forward from Winnie and me. Thank you for watching. News and updates continue on the other side.